Welcome to Charity Therapy, the podcast where we explore the ups and downs of the nonprofit sector and answer your burning questions. I'm your host, Jess Birkin, owner of Birkin Law Office, and I'm excited you're here. Imagine hanging out with me and my super smart, funny nonprofit expert pals. You get to ask them anything about your nitty-gritty nonprofit life and get their wisdom for free. Whether you're a seasoned pro or just strapping on your nonprofit boots, we're here to share stories and remind you you're not alone on this journey. So get ready to join the conversation and bring me the tough questions. I ain't scared. Ready to rock? Let's dive in. Hey y'all, welcome to this episode of Charity Therapy. I'm Jess Birkin, back today with my co-host Megan.
Hey y'all.
Oh, and Megan, the introvert, tries to be crazy. That cracks me up.
Sorry, man. I had to try to imitate, but it didn't work.
Okay, I need to tell you that my front door and the back door are covered in diatomaceous earth because there are Asian beetles, the fake ladybugs, are swarming my house right now, and they're trying to get in. And periodically, I will just find an Asian beetle in my house, and I'm walking around smashing these orange bugs. It's so gross. So put it like a curse or a hex on my front door and my back door because I'm convinced that's where they're coming in because that's where I'm finding them. So there's all this white powder, and it probably looks like there was a cocaine explosion or some witchcraft ceremony is happening at my house right now. So just FYI.
Good to know. I mean, I will probably be
under
over there
siege
at some point. Yeah, exactly. It's you got the ducks quacking outside and the ladybugs trying to get inside and the everything else. Yeah.
Seriously, they're not even good ladybugs. They're the creepy, invasive ones that want to nest inside your house over the winter. No, thank you.
Aren't those the ones too that they smell weird when you squash them? They're kind of nasty.
Those are stink bugs, which also like to try and come in my house in the winter. So I kill them very I try and make a direct hit, but not smash them.
Yes, there you go. Yeah, it's the gentle kill.
Yeah, if you know how to stop these creatures from getting inside, get at me.
Yeah, truly.
I'm under attack.
Hot take. We don't like bugs in our house. Who knew?
I'm cool with bugs outside. I'm a big outdoors person. Just don't be in here, please.
No, it's not for you. This is my house. Okay. Anyways, let's move on from the bug conversation.
Let's stop smashing bugs and smash some nonprofit topics. Was that good?
Nice segue. Loved it. The little, the voice really just clinched that for me. I appreciated it.
Sunday, Union Grove, Wisconsin, Great Lakes Dragaway. That's where that voice comes from, by the way. Whoever made those ads for the monster truck shows in southeastern Wisconsin in the 80s has a permanent residency in my brain.
Okay, and now I need to know how many listeners are in that particular niche that knew what you were talking about, because I'm hopefully there's at least one, and get at us, because that is so
Megatron. Come watch him smash the cars, or whatever they would say.
Yeah, perfect.
Only people who were alive in the 80s understand the monster truck rally, I feel like. Is that not even a thing anymore?
No, I remember it a little bit from when I was a kid, but not much. Yeah, that was before me. Well, today we're going to be, that's hard.
Let's actually get down to business. Okay, fine.
We're turning right. And today we're talking about dissolution, but with a really specific wrinkle on it. So we've been starting to get calls from organizations that are going out of business. But now, since the pandemic, many of those organizations have an EIDL or EIDL loan from the SBA. And it's okay, what do we do with that now that we are dissolving? So just as a little nugget at the top here, we'll get into all the details, but what is an EIDL loan?
Okay, so this is back in the dark times of COVID. The government was giving out loans, some of which were forgivable, and that was the paycheck protection, blah, 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 and some which are not forgivable. And that's the economic injury disaster loan. And that's something that businesses can take advantage of whenever there is a disaster. Usually there are authorizations to have one of these loans if you need it to rebuild your business. And these are federal loans from the Small Business Administration. So that's the U.S. government is trying to help regenerate the economy, basically. And so a lot of organizations took these economic injury disaster loans because they had an extremely low interest rate and favorable terms, and you can pay it off over like 30 years and you could get like a shitload of money this way.
Yes. Yeah. And lots and lots and lots of them were given out. And we are now in the like payment side of things, right? Like pretty much everyone has started paying back their EIDL.
Yeah. Like think of it like a mortgage. Like it's a 30-year loan. So if your business or nonprofit is not lasting 30 years, what you going to do with that?
All right, let's answer that question. Let's get right into it. So here is our listener question today. I am the president of a community organization, and we are in the process of closing down. Ever since 2020, we just haven't been able to make ends meet. The board is trying to figure out what all needs to happen throughout the dissolution process, and we're really concerned about our COVID disaster loan from the SBA. We got an EIDL back in 2020 for $525,000. What is the process for getting rid of this? We can't afford to pay it all back down before we shut down.
Oh boy. Okay. Well, that's a lot of money.
It is.
That's a lot of money that got just like used up, and now they're SOL with nothing to show for it.
Right,
like
exactly.
A lot of these disaster loans. Okay, so we've talked about dissolution. Depending on what state you're in, it's going to be a little, your mileage may vary, but most states require you to like go through a process where you notify any creditors. And nonprofits are just like any other business. They have debts and obligations and creditors. And so if you owe money, like you have a copier lease for 36 months and you're supposed to pay the copier people, you need to notify them that you're going out of business. You don't want this copier and you're going to default on your lease. That's a creditor. And you need to notify your creditors that you're going to go under. And then your creditors have a right to come in and say, like, what money do you have? Because you owe us a bunch of money. So, like, what gives? So the biggest one we'll see is the nonprofit is leasing a commercial office space or leasing some kind of space. And if you've ever worked with commercial leases, you know, they're like, basically, you can't cancel. Or you can, but you're going to pay the entire 5 years of the lease. There's no like early termination allowed. So those creditors will come and be like, great, you're canceling 3 years early. How do you plan to make the 36 months payment that you owe us under this contract? So that's kind of the process that we help clients with when they're going through this. And we, you know, I smile through the phone and say, oh, this nonprofit doesn't have any money left. Surely you understand. So you're going to be doing that with the U.S. federal government. And I don't have a good answer for this because there really isn't a ton of data. I only have like anecdotal, like what I have seen the few times I have seen this is that the SBA is not enforcing these loans on nonprofits that are going under, but I don't have a great sample size. I'm just one lawyer. So I can't like promise that the SBA is not going to come after you. So the thing with these loans is if you took a loan that was over 200 something, if it was like over 299, I forget the actual number right now, but if it was like over 200 something thousand, you made a personal guarantee. And most nonprofits just signed the paperwork. They didn't read it. They don't know what they were doing. They're just like, money is good. Money at 2% interest rate is great. Let's take the money. And so they were just like, click, 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 sign, sign, sign. Well, they signed, whoever signed that agreement signed a personal guarantee that you would be personally liable for that money if it was over this amount. And $525,000 is well over that amount. So somebody there signed a personal guarantee. Technically, the paperwork says that that person's personally liable. But what I've heard anecdotally from people going through this process is that the Small Business Administration has no intention of holding these nonprofits to a personal guarantee because obviously they don't own the nonprofit. Like a business owner owns their business and like, hey, you're putting your butt on the line for this money because this is your business. They're not going to enforce it is kind of like what I'm picking up. But technically the paper does say that whoever signed it is responsible. So, it'll be interesting to see how this shakes out, because I know from reading the news that the SBA is like completely overwhelmed with businesses who are defaulting on their loans because they're going out of business and they took a loan like this. So they're drowning in this paperwork. So I don't know. I don't have a great answer, but it might be like the best time ever to default on one of these loans because they're so overwhelmed.
Absolutely. And I mean, it makes sense that we're at this place. It's 2024, the end of 2024 right now as we are recording. And that means that, it's been 4 years, 3.5 years since all of this has gone down. And it's like, okay, the EIDL loans may have helped folks for a short period of time, but so much has changed since the pandemic. Even if you accepted this loan with full intention that this was going to get you through a tough spot and the nonprofit would continue on after that, and you had no idea that you might be facing dissolution today, it makes sense that that's where these people are.
No, I mean, nobody could predict. I mean, just think about like your own, like nobody leaves the house anymore. Like we do, but like I'm not going out to eat all the time. I'm not going to theaters. I'm not going to movie theater. Because even though like the pandemic ended, the economy has been crazy. People don't have as much disposable income. So for organizations that are in the arts, it's like restaurants. Like I'll turn over like a thing in my wallet and be like, oh, I have a gift certificate for this place. Gee, I wonder if they're still in business even, because so many places have just gone under because we kind of just never got back to the way it was. So if you have an earned income revenue model and, you're like the YMCA or something where people are paying this expensive rate to go do a thing because it's good and it helps the other programs they have, you just might not have that many participants in your programs anymore. Like I can't imagine theaters and museums are doing great right now.
Exactly. Just so much has changed. And like you said, there's no predicting it. So we're here now where
no shame.
All these folks are.
You took this $500,000 loan thinking this would bridge the gap. Yeah. But the gap has been
just going and going and
not
going.
About the virus. The virus went away or is endemic. It's more like the gap is still gapping for a lot of organizations.
Yeah, absolutely. So I have a couple takeaways here, Jess, then based on what you've said. So first of all, when you dissolve a nonprofit, part of that process, it'll look a little different in each state, but no matter what, part of the process is notifying your creditors. So people who you owe money to. And when you do that, you go through a negotiation process with those creditors to say, like, this is what we can pay you, or we're not going to pay you, or whatever that looks like. And in the case of a emergency disaster loan from the SBA, it's the same thing. They are a creditor of the organization because you owe them money. At this stage, we don't really know what the SBA is doing with these people who are defaulting. We have anecdotal evidence, but there is no for sure this is exactly how this is going to go for folks who are going through dissolution right now and have an EIDL loan that they are defaulting on. And through that anecdotal evidence, it is seeming like folks who did sign a personal guarantee, whether they knew it or not that they were signing a personal guarantee, are not being held responsible for those loans. But again, that's for nonprofits.
Nonprofits.
Important distinction.
Yeah.
But again, we can't guarantee that either. So we are in a big kind of gray, foggy abyss with this kind of stuff where all we can really do is help folks navigate it, but we can't promise any outcomes with these dissolutions right now.
I mean, you should get some legal advice and you should follow all the creditor notification processes that your state requires.
Yes.
And like, as long as you do that, you're probably going to be fine. That's my thought.
Yeah. Don't panic. Don't panic is a big one.
And don't try and keep the organization open to service alone.
No, that's not the purpose of your nonprofit. Yeah. And also, just as another little bonus, like read the paperwork that you're signing, just so you actually know what's going on.
Always a good takeaway. Read the contract that you're signing. If you're putting your name on it, you should read it. Absolutely.
Yes.
Megan, thanks for being here.
Thanks so much, Jess.
Folks, if you enjoyed this episode, I would love it if you'd share it with a friend. If you have an organization that's going out of business and has an EIDL loan and needs advice, send them to a lawyer, send them to me. It can help. If you have a question or a story to share, we would love to hear from you. Head over to charitytherapy.show and drop us a line. Thanks for listening.